Good morning, everyone. I'm Rusmik Oza from Kotak Securities. Welcome to the weekly fundamental podcast. To start with, on the international front, the MSCI Emerging Markets Index has gained 4.8% since the start of this calendar year, as compared to 2.4% gains recorded by the MSCI World Index and 1.8% by the S&P 500. Most of the emerging markets have outperformed India at the start of this calendar year. Last week, the Democrats took control of both the houses, which will allow the newly elected President Mr. Biden to push through policies and fiscal spending. The Georgia vote now also increases the risk of potential hike in taxes for corporates. After the US labor market lost jobs in December, the elected President Mr. Biden called for trillions of dollars in immediate economic support, including increased direct payments. The blue wave in the US could lead to higher stimulus and spending in the US, which could keep liquidity at higher levels. This, coupled with faster economic recovery in parts of Asia and emerging markets, could strengthen the case for value and cyclical stocks to outperform this year. The ongoing political and regulatory uncertainties in China could prompt investors to look at other emerging markets. Also, the rise in crude prices is helping to revive the Middle East markets to a large extent. The US 10-year Treasury yields last week climbed above the psychological 1% level for the first time since the pandemic turbulence started in March. The rising commodity prices may eventually fuel higher inflation expectations, which could also push the yields higher sometime in the next few months. Technically, the US 10-year yield has broken the 50 weekly moving average placed at 0.81%, which signals that it will eventually head towards the 200 weekly moving average, which is placed at 2%. The emerging market equity benchmark index rose to a record closing, marginally higher than its previous peak reached before the 2008 financial crisis. After the US election results, the MSCI Emerging Market Index has rallied by 21% as compared to 15% gains seen in the S&P 500 index. If the MSCI Emerging Market Index sustains and closes above its last week's high for one or two more weeks, then the breakout will be confirmed and we could see the index trading in a new zone and achieving new highs. The fast rally in emerging markets has taken the MSCI EM index RSI levels to 79 on the weekly charts, signaling it is already into overbought zone. So the next 2 to 3 weeks will be very deciding for emerging markets as to whether they break into a new zone or turn around from the current levels. So that was on the international side. Moving over to India, the start of calendar year has been decent, with Nifty 50 and BSE Sensex gaining 2.3% and 1.9% respectively last week. The broader indices performed even better than the benchmark indices last week, as the Nifty Midcap Index gained 5.2% and the BSE Small Cap Index gained 2.7%. On the back of rising metal prices and hope of very good set of Q3 earnings, the BSE Metal Index rose 9% last week. On the macro side, the RBI has announced 14-day variable rate reverse repo auction of Rs 2 lakh crore. With this, the RBI has taken the first step towards reverting to pre-COVID liquidity management operations in a phased manner. It also suggests that the RBI is beginning to normalize policy ahead of our expectation of Q1 of FY22. Given that banks have parked around Rs 7.1 lakh crore in the reverse repo window, we believe that liquidity normalization measures will need to be aggressive to anchor the operating target rate closer to the repo rate. In short, to summarize, we expect short-term rates to harden going forward. Moving on to earnings, we released our Q3 FY21 preview report last week. On a YOY basis, we expect Nifty 50 sales growth to be minus 1.2% and EBITDA growth to be 19%. EBITDA margins of Nifty 50 is expected to improve from 16.4% in Q3 of FY20 to 19.9% in Q3 of FY21. We expect net profit of Nifty 50 index to increase 19% both on YOY and Q on Q basis. On a broader basis, results of mid and small caps are expected to be better than the Nifty 50 companies. This can be gauged by the 46.5% YOY earnings growth expectations for a universe of companies in Q3 FY21. In sectors, we expect strong YOY increase in earnings of automobiles, banks, cement, paints, oil marketing PSUs, metals and mining companies, pharmaceuticals and telecom stocks. Our revised EPS for Nifty 50 index stands at 494 for FY21 estimates and rupees 632 for FY22 estimates. So there has been a marginal uptick in the earnings estimate of Nifty for the next 2 years. TCS and Avenue Supermart have started the results season by beating estimates by a big margin. We expect earnings upgrades in most stocks during the earnings season. On flows, the FII flow started on a slow note, but with Friday's provisional figures, the net FII buying last week has gone to around rupees 9,000 crore. Some of the DIIs continue to remain net sellers with outflows of rupees 4047 crores seen last week. The outcome of Georgia state elections has removed the event risk, which should help flows into emerging markets and India resume from this week onwards. Expect markets to remain firm going forward because of the start of earnings season and also the start of vaccination program. Looking at the firm start of this calendar year, we expect Nifty 50 to go anywhere between 14,500 and 15,000 before the budget. The focus would clearly be in stocks where chances of bigger earnings upgrades is visible after Q3 results. There are few stocks where Q3 earnings growth is expected to be very high and we expect potential of earnings upgrades also to play out in some of them. These companies are companies where we have buy or add rating. The names are Escorts, Karur Vysya Bank, LIC Housing Finance, Dalmia Bharat, Hindustan Unilever, Hindalco, Tata Steel and Sun Pharma. I would be covering the budget expectations in my next week's podcast and also discuss whether it makes sense to hedge the portfolio before the budget. That is a key event going forward after the earnings season start. So that's it from my side this week. Thanks everyone for listening to this podcast. Have a great week ahead.